Welcome to This Explainer. Today, we're unpacking a massive shift: how to move from just managing financial anxiety to achieving true financial empowerment. We are going to tackle the absolute most expensive mistakes people make, both in their personal lives and in their businesses. Whether you're juggling a growing family budget or scaling your own company, the financial decisions you make today are going to compound for years to come. So, let's jump right in and explore the data, the expert advice, and the simple, everyday habits that can completely change your financial trajectory.
We've got a two-sided ledger approach for our agenda today. First up, personal finance pitfalls. Then, mastering your personal money. Next, business bookkeeping blunders. And finally, building a money mindset. We'll start on the personal side before pivoting over to the essential rules every freelancer and small business owner absolutely needs to know.
All right, let's get into Section 1, Personal Finance Pitfalls, the most common money mistakes. We're going to identify the hidden traps that might literally be draining your bank account without you even realizing it.
Get this. Americans collectively owe over $1.2 trillion in credit card debt. Trillion. Now, we all know not all debt is created equal, but carrying this kind of high-interest debt, it's a massive setback. We're often talking about interest rates sitting above 25%. At those rates, the interest can actually grow faster than the balance itself. It's a quiet wealth destroyer that eats up your cash flow and makes it incredibly difficult to get ahead.
But that high-interest debt doesn't just appear out of nowhere, right? It usually stems from a few very common pitfalls, especially for young adults. It's basically a domino effect. Ignoring a simple budget triggers the first domino. Without a plan, it is so easy to overspend. That leads straight into lifestyle inflation, living well beyond your means, which forces you to rely on credit cards, and when your money is completely tied up in paying off yesterday's debt, you inevitably delay saving for retirement and completely neglect building an emergency fund.
Let's be real for a second about the psychology here. Specifically, the clash between emotional decisions and rational goals. Money and emotions, they just don't mix well. It's human nature to fall into patterns like stress shopping, or revenge spending to make up for a bad week, or even just trying to keep up with social pressure. But here's the thing. Those emotional choices will wreck your rational, long-term goals. Overexpending yourself today just to project a certain image is pretty much a fast track to serious debt tomorrow.
So, how do we fix it? That brings us to Section 2, Mastering Your Personal Money. Actionable fixes for financial health. Let's look at the exact steps you can take to build up your defenses and truly master your money. I absolutely love this strategy for combating that emotional spending we just talked about. Instead of giving in to an impulsive buy, you know the feeling, just wait 24 hours. Just hit pause. Waiting a single day before making a non-essential purchase can completely derail a bad financial decision. It forces mindful spending. You see it, you wait a day, and then you evaluate if that purchase actually aligns with your real financial goals. That sense of mindfulness leads right into 3 steps for budgeting success that you can actually stick to. Step 1 is pure awareness. Track your spending to find your patterns. Step 2, build a realistic, flexible plan. If a budget is too rigid, it's going to fall apart the second an unexpected expense pops up. But Step 3 is the real secret sauce. Pay yourself first. By automating your savings and routing money away the moment you get paid, you completely remove the temptation to overspend. You turn saving into an automatic default habit. And where exactly should those automated savings go first? Right into an emergency fund. Now, the golden rule is saving 3 to 6 months' worth of living expenses in an easily accessible account. But to put things into perspective, less than half of Americans could cover a $1,000 surprise expense using just their savings. That is wild. Building this cash cushion is your ultimate defense against unexpected setbacks. It stops a minor surprise crisis from spiraling into a long-term financial disaster. Okay, so we've got the personal side of the ledger down, and those principles are totally foundational. But what if you run a side hustle or your own business? Well, the stakes get higher and the rules of the game shift dramatically. Which leads us to Section 3, Business Bookkeeping Blunders, the hidden costs of disorganization. Because behind all the flashy sales and marketing, it's actually the bookkeeping that decides if a company survives.
Listen, if you only take one thing away from this section, let it be this. Mixing personal and business funds is the absolute most expensive blunder an entrepreneur can make. Swiping your personal card for a business expense might feel convenient in the moment, but it creates a massive mess. It muddles your financial reports, making it literally impossible to know if you're actually turning a profit.
It guarantees you're going to miss tax deductions. It turns an IRS audit into a total nightmare. And worst of all, mixing funds can actually pierce the corporate veil and weaken your LLC's legal protections. You absolutely must have a separate business bank account.
Now, we all know cash flow is the lifeblood of a business. The money coming in and going out that lets you pay vendors, employees, and rent. But here is the crucial takeaway. Your business might look highly profitable on paper, but it can still fail entirely if the actual cash isn't in the bank. So many owners obsess over top-line revenue but completely ignore cash flow. If your money is tied up in unpaid invoices, your business will just freeze, period. It's one of the top reasons small businesses go under.
And you really can't manage that cash flow if you're relying on totally outdated DIY manual systems. Actually, scratch that. Doing it manually and spreadsheets isn't just outdated. It drastically increases the risk of human error and eats up way too much of your time. Modern cloud accounting, though, it's a game changer. It gives you real-time data, automates your transactions, and pulls you out of the weeds so you can actually focus on growing your business.
Shifting from that DIY mindset to a professional system solves these headaches immediately. Keep missing tax deadlines? Hire a CPA for year-round strategic planning, not just a frantic scramble in April. Got unpaid invoices choking your cash flow? Set up automated payment reminders. Failing to reconcile accounts? Implement strict monthly bank reviews to catch duplicate expenses or even fraud. Honestly, untangling years of bad bookkeeping is insanely expensive, so getting professional systems in place early is one of the best investments you can make.
Finally, let's bring it all together in Section 4, Building a Money Mindset. Universal rules for long-term empowerment. Because whether you're paying household bills or managing a corporate payroll, the core philosophies of money are remarkably similar.
I came across this quote in the research, and it really hit the nail on the head. Time is one of the most powerful tools in personal finance. Whether it's retirement savings or growing business capital, starting early lets compounding interest do the heavy lifting for you. Just contributing a little bit in your 20s can mean a six-figure difference by retirement compared to starting a decade later. Time is literally your greatest leverage. Use it.
Ultimately, this whole thing isn't about being flawless. It's about consistency. Small, repeatable habits compound into far greater results than drastic, short-lived changes. Waiting 24 hours before you buy something, paying yourself first, reviewing your business financials every single month, these small daily habits are the ones that actually move the needle. Financial health is a marathon, not a sprint. So, as we wrap up this explainer, I want to leave you with one final question to think about. What is the very first step you will take today to secure your financial future? You don't have to overhaul your whole life by tomorrow, whether it's setting up that automated transfer for your emergency fund, finally opening that dedicated business checking account, or just tracking last month's spending. Take that single step today. Watch how fast that financial anxiety transforms into true empowerment. Thank you so much for learning with us, and keep compounding those good habits.